Good morning from the UK and good afternoon if you're listening from somewhere in Asia Pacific. Thanks for joining us again on this OAG monthly webinar. I'm Becca Rowland and I'm a partner at Midas Aviation, and I'm going to be hosting the webinar today. It's now almost a year since the first of these, when we were discussing the impact of the COVID pandemic on aviation. I don't think any of us expected a year on that we'd still be talking about it. We'd still be here, we'd still be meeting it through webinars. I've noticed that there's lots of 1 year on type of reviews at the moment, but tempting though it is, we're not going to be looking back over the last year. We're going to, as always, be trying to focus on what the next few weeks, months, and maybe years are going to be like. And we'll be doing that with the help of some OAG data, but also from our insight, analysis, and industry knowledge. This week, we want to take a deeper look into where the airlines are at and what we can expect over the coming months. A conversation with the team a few weeks ago had us asking, why have we seen relatively few airline failures when we might have expected many more by now, given the fact that international air travel in particular has been so hard hit. So we're going to be looking at that amongst other things. We'll be looking at Q1, prospects for Q2, what strategies are we seeing to help airlines survive? And what do we think of the prospects for this summer? Joining me today to help shed light on this topic is Brendan Sobie, who's based in Singapore and is an independent analyst with oodles of industry experience, and is able particularly to comment on the situation in Asia Pacific, the Middle East and Africa. And it's sort of appropriate to have Brendan here today, as he was on our first webinar back in March last year. So welcome back, Brendan.
Thanks, Becca, and it's great to be back on after a year and to talk about the next year.
Great. And we've also got, as usual, John Grant from OAG, who's got huge amounts to say, as always, and provides excellent insights and analysis, along with plenty of opinions. We've not run out of things to say yet, John.
Hello, Becca.
Hello, John. I think that was a slightly ironic pause in the conversation, wasn't it, John? Thank you very much. Okay, let's make a start. So, as always, we tend to look at the capacity, what's happening now. I know I said we're not really looking back, but this is really about where we are now. We've been grappling, as I guess many of you have, how do we look at data now? Do we look at it for now versus last year? Do we start looking at it now versus 2019? So this shows our dilemma in many ways. On the left, you've got a chart, a table and chart that looks at capacity by month for different regions versus the same month last year. And on the right, you've got weekly data for the past 8 weeks, but looking at it versus 2019. So if that hasn't confused you, John will help talk us through it. What are we seeing here, John, in the numbers?
Well, first thing, of course, to recognise, Becca, is that as we blow out the candle on the 1 year anniversary of this event and these webinars, that we're beginning to see a bit of growth on last year. Well, you know, take it with a pinch of salt, because many markets had already begun their collapse, and we'll see more of that in the coming weeks, I guess. But for me, I think it is the frustration of how COVID-19 has impacted different markets at different times. So, you know, this week's data is fascinating because there is phenomenal capacity growth taking place in North America, as US airlines are full of optimism around their domestic services, whilst at the same time in lower South America, we're seeing somewhere around 15% of capacity being cut, as Brazil is again having a pretty torrid time with COVID-19. But we're not making any progress in Western Europe. It's still pretty flat. In fact, in the United Kingdom, more countries were added to the red list this week than were removed, including Doha, and obviously that will impact Qatar Airways and their connecting traffic that they were putting into London. So it's a pretty mixed bag. We're still at just about 58 million seats a week. and that gives us about 56% of the capacity we had pre-COVID. Long way to go, long way to go in nearly every market. And, you know, certainly for the next couple of months, there remains little optimism outside of the United States, I think.
Yeah,
Okay.
John, I'd like just to make a point about Asia, because you see that Asia, you know, year over year it looks stronger, but you have to remember that COVID began in Asia, particularly China. So it began nearly 2 months earlier than everywhere else, and you had China impacted, particularly China domestic, which is a huge market, and you had the rest of Asia, which is more exposed to China than the rest of the world, impacted. So the year-over-year comparisons get a little bit off now, and I think the 2019 comparisons become more relevant because of that.
I think Becca, one other thing, of course, to just always keep in the back of our minds is that China is now operating with only 1% of their capacity is allocated to international services. So to Brendan's point, they have completely, and I don't like the word pivoted, to a domestic operation, and that will not be sustainable, both for the global recovery and their own airlines performance.
Though it's quite handy at the moment, isn't it? I mean, if all the Chinese are traveling domestically and not spending their money overseas, then where's the incentive to open up internationally?
Yeah, that's a very good point, and China is likely to not open up quickly, and perhaps slower than a lot of other markets. And when they do open up, you won't necessarily see the mass travel. You might see more select business travel and so forth. China they've done much better than every other market, and the airlines in China have done better than virtually every airline in the world, for the last 11 months. So they're benefiting from that, relatively speaking, but eventually they of course do need international, especially the airlines, and the rest of the world needs China, because China is the biggest outbound and the fastest growing outbound market. So especially the economies here in Asia and the airlines here in Asia, really need the Chinese to return. But China overall has done very well. In fact, so well that it kind of skews the overall Asian numbers. I've made this point before in other webinars, but Asia really lags the rest of the world as a region once you exclude China. So you have basically domestic China doing better than the rest of the world, for almost the entire period of the crisis, while the rest of Asia lags, and it actually would be the worst performing region once you exclude China.
Yeah, maybe next time we'll break China out as a separate item. That might be helpful. Let's have a look at capacity going forward. The black line here is 2019, the grey line is 2020, and the yellow line is where we're at now, with a dotted line, what we're seeing in the schedule for capacity going forward. And this is domestic and international, so global capacity. We're going to see some of that capacity coming out again, aren't we, John? This is, as I think Brendan was saying to us earlier, it's sort of in the schedule now as a holding pattern, but we're still seeing airlines changing capacity at very short notice, aren't they, continually? They just don't know what May, June will look like.
No, we are, and typically airlines are looking no more than 6 weeks forward in terms of their schedules, and even shorter for domestic operations. So you tend to see a pattern where a major carrier with both an international and domestic network will cut their international capacity at 6 weeks, and then a couple of weeks later they'll begin cutting back on domestic capacity. So airlines are literally just putting placeholders out there on what they would like to operate and what they would normally intend to operate, with a very clear knowledge that that's not going to happen and things will change. And indeed, we were looking at some of the countries that are still in lockdown, but their capacity is still included within these numbers. So for example, 22% of the capacity you see here in the last week of June is either for the transatlantic or international capacity to and from the UK, which we cannot be certain about, and similarly Japan, China and New Zealand. So this 60 million seats a week you know, with some strong growth, perhaps we could get back to about 75, maybe 80 million in the peak of the summer, but we're certainly not going to get to these numbers. And that's a risk for airlines, but it's also a risk for travelers, you know, who are even thinking about booking flights in the coming months. Are they going to actually be booking something that will operate, or are they going to have to change their travel plans, or indeed even end up with vouchers to use at some other date? Very frustrating for everyone.
Yeah, you have to remember that airlines are incentivized to sell as much as they possibly can, so they always are erring on more the side of more flights than less flights, and then dealing with cancellations or capacity changes much later on. So a lot of airlines are continuing to have these default schedules, or even full schedules in some cases, until a couple of months out for international, just a few weeks for domestic. There's very few airlines that zeroed out capacity. Qantas was one of them, but there's very few that did that, which means they basically said, okay, we're going to do zero until we're ready to go back into resuming long haul or international flying. Most airlines basically have kept with the default schedules and selling, in some cases, entire schedules for more than for a few months out and beyond. So you know, so we continue to have this issue, and everybody has to kind of recognize that, I think, and it will be like that for at least the next for the rest of the year. I would say probably still going to be like that.
Yeah, we're going to come on to the sort of question of why we've seen so few airline failures. But I guess while, you know, we'll talk about liquidity amongst other things. But I guess, you know, you don't need to be flying to have liquidity. You need to have bookings. You need people to be booking still. So you need to have some capacity in the schedule so people can book and you can bring some cash in, don't you? I guess that's one factor which is driving some of this.
Yeah, absolutely. And you know, it's also a part of why some airlines ended up in the situation they did end up in, because they had been living on cash flow prior to COVID-19. Many of them, you know, were just churning the cash over and were not building cash reserves. That came back to bite them quite badly this time last year.
So our next slide looks specifically at some of the Asian markets and the domestic markets. In our conversations with Brendan before this, you were interested, Brendan, weren't you, particularly in looking at some of the domestic Asian market trends? And we're seeing quite an uneven picture, aren't we? With this is a selection of 6 of the biggest markets. What are your observations here, Brendan?
Yeah, so I mean, a lot of people just think it's like a one-way, you know, curve up, but it hasn't been that at all. There's been setbacks in almost every market, and generally speaking, Asia domestic recovery levels peaked, you know, in the 4th quarter of last year. So even if you look at more than just these 6 markets, but say the top 10 markets, if you look at like markets like the Philippines and Indonesia and Malaysia. And South Korea, which are the other kind of main domestic markets in Asia, almost all of them were at higher levels in the 4th quarter of last year than they have been in the 1st quarter of this year. So you have a general trend down because of cases, you know, have increased in many of these countries, and the new wave and the new variant. So now we're just starting to see some improvements, you know, in some of these markets, but not all of them. Some of them, like Australia, for example, has, you know, is back at the best level yet. But the other markets are still lagging compared to what they were at the best, at the peak in the 4th quarter of last year. And I'm not saying peak seasonally, I'm just saying peak in terms of the recovery rate so far. So some markets, you know, like Vietnam, China, and South Korea have gotten to 100%, you know, pre-COVID level, but then actually dipped a little bit in February. South Korea a little bit earlier than that. And the other markets, including Thailand and Japan, Malaysia, they have, and Indonesia, they also dipped in January, February compared to November, December. And they continue to be at relatively low levels. So we have to continue to look out for these markets. They should start coming back in the 2nd quarter, but again, it'll be uneven. Some will come back faster than others. Some, you know, might come back and then have another dip. It's just not there's just not straight curves for any of these markets. So that's the kind of the key lesson here.
Yeah, thanks. We did originally pull the data for those other markets as well, but the slide looked a bit too busy. So John, you were...
Yeah, Becca, it's exactly the same. I mean, this picture has been reflected in Europe as well across the airlines. You know, however bad they thought the first quarter was going to be, it was a lot worse than anyone expected. Many of them having to go back to their shareholders, investors, governments for additional loans or support. So, you know, if the airlines had a time path out of COVID-19 in November and December, and they were hoping to follow it, then, you know, they probably lost a whole quarter in terms of that recovery. It's been very, very painful this first quarter. And I don't think anyone will miss the end of March and the hope that April and the summer season will bring some additional revenues and a recovery in demand.
While we have Japan on the slide here, I'm interested, Brendan, what are your thoughts about Japan this summer with the, you know, Olympics potentially supposedly going ahead? Is it going to be a domestic only affair? What does this data tell us here about what might happen in Japan this summer?
Yeah, so Japan, like a lot of the other markets, is still down compared to what it was, you know, at when things were better in the second half of last year domestically. So, and I think there is an opportunity to get back to full, potentially even full pre-COVID levels in the summer. But it all depends on, you know, containment efforts. You know, the vaccination rates might not be high enough yet. So until maybe later this year. So really, for the next 6 months, it's more about containment and whether people are confident enough to travel domestically. Of course, the Olympics could have an added incentive, but that depends on, you know, whether people are even allowed to attend the Olympics. You know, and that will really depend on containment levels and so forth in terms of crowds and what is allowed.
I think a big issue, Brendan, as well as, you know, the obvious COVID rates, is that the Japanese airports do not appear to have begun to prepare to accept international travellers in the volumes that would be required for the Olympics. You know, I've heard from some of my OAG colleagues in Japan that they can process about 1,500 passengers a day in Narita and Haneda at the moment, international arriving passengers. And, you know, because the country has not been as badly affected as many other places, it has not perhaps realised or geared itself up to meet the requirements that will be forced upon it for international travel. And it's one of the factors that I think the airlines are becoming increasingly frustrated about, is that some markets and, you know, the required protocols are not being put in place quick enough to allow them to return. Very frustrating.
Yeah,
we're hearing some dates for international opening that are quite a long way out, aren't we, John? You were saying that some of the tier 2 airports in Japan may not really be thinking about opening till...
No, absolutely not. Some of them are saying, you know, given the availability of resources, given the way that the planning is going, unless something dramatic happens, they would be unlikely to see international services returning before March 2022. So another 12 months on from here. Now, that may seem cautious, and it may seem, you know, a long way out. But the frustrating element for that is that if you look at somewhere like China and the recovery of Chinese international demand and capacity, Japan would probably be the #1 or the #2 market they would look at to put new air services back into.
Very interesting. Okay, let's move on and start having a look at the airlines. We promised we'd look at airlines today in a bit more depth. So a tough year, obviously, for the airlines. Overall, when we look at the top 25 global airlines, capacity fell 44% in 2020 and traffic fell 57%, according to OAG data. We've shown a selection of the top 25 airlines here. This is top 25 in 2019, so what we used to think of as our top airlines, and we've pulled out those that are in Asia Pacific. So some quite different sort of fortunes here, but we, you know, obviously it's all negative, but as Brendan said, China is quite different to elsewhere. So Chinese carriers, capacity down not as much, traffic down not as much. The other Asia Pacific carriers actually performed not as bad as the rest of the world, but still, you know, it's a mix there. But that's just this selection of carriers. Is there anything? Indigo is an interesting one, isn't it? It's still doing relatively well.
Yeah, and they have flexed their capacity, you know, very, very effectively through the whole pandemic event. They've responded quickly when they need to cut capacity, and they've equally been very quick at putting capacity back in. I think, Becca, it just highlights, you know, that even those carriers that we think have done relatively well are still looking at -20, 25% capacity against previous years, and some of these are just stuck and unable to move at the moment. You know, so the two Japanese carriers you have there, All Nippon and Japan Airlines. I mean, it is predominantly domestic networks for them as well, and we know that they're making further capacity cuts in April. There's about 30% of their domestic capacity being cut in April. So these numbers for some of these airlines could go backwards. And of course, Hainan Airlines, or the HNA group, went into bankruptcy as part of the perhaps bigger issue they had within the group. So it's frustrating times for everyone.
Yes, I mean, so what you see in the slide is the, you know, the leading domestic markets, you know, Japan, China, and India, and so those airlines with high exposure to those markets, the market leaders in those countries, are doing relatively better from a capacity and traffic perspective. But you have to also take into account that domestic traffic, it generates a lot less revenue than international, and particularly in intensely competitive markets like India and some of the smaller domestic markets in Asia. So it's actually, the actual financial impact is much worse than what the traffic impact is, because domestic is generally low yielding and very competitive, and just not generating a sufficient amount of revenue to cover fixed costs, really just covering variable costs. So the financial impact is much higher than actually even a traffic figure would indicate.
Yeah, there's so many different ways to measure it, but you're absolutely right there, Brendan. Let's have a look. We've got a couple of slides now where we look at some different parts of the world, and this shows some of those airlines. Just again, looks at capacity. It's not traffic, it's not revenue. We understand that, but you know, on the left here we've got some of the three big Chinese carriers, how their capacity's changed since the beginning of last year. On the right we've got the US carriers. The dotted line is what's in the schedule, but obviously not yet flown. It's in the future. Just so much variability, isn't it? It just shows the extent to which airlines are grappling every week, every month with trying to work out what to fly. And you know, on the right of the US carriers chart, just huge expectations of more capacity for the next few months, isn't it?
It is, and I think this is fascinating, particularly the US airlines, because, you know, looking at the data every Sunday morning before I go to church, you know, I almost with disbelief the growth in capacity that we see coming up week on week, and listening to some of the airlines reports in the last week, they're saying that the vaccine program is really effective in the US market, and they are seeing a huge demand for domestic travel. And we're seeing some of the low-cost carriers enter markets like they've never been in before, such as Southwest going to Miami. I mean, Florida is going to be swamped with air services this summer, looking at how much capacity every airline is adding. But it's a stark difference and a warning to the rest of the world, perhaps, that, you know, a country with a vaccine program that has been effective and is beginning to reach a large proportion of the population base has seen a large recovery in domestic demand. Whereas in the United Kingdom, you know, we are way ahead of our European colleagues who seem to have stopped to give us a chance to get further ahead. Because the majority of our travel is international travel, demand is still sluggish, and airlines are unable to put that amount of capacity back in. And it just goes to highlight this issue is just bigger than capacity. It is about vaccinations, and not just vaccinations, but reciprocal overseas vaccination rates to allow people to travel. If we don't get that sorted, then, you know, with the best will in the world, everyone in the UK could be vaccinated, but traveling overseas will remain very challenging unless we all go to Florida.
but John, I agree with your points there, but on the US airlines, those carriers have had a huge amount of support as well, haven't they? They've been well supported by the government so that they are in a position to just ramp up capacity again as required, aren't they? Is that a factor we're seeing there as well?
They have been supported, and, you know, that degree of support has not been provided in other markets, but it certainly was in China, you know, and it has been in other parts of Europe. And ultimately, you know, IAG have a loan guarantee from the UK government. So eventually we sort of got to a point where there is either direct or indirect support and assistance has become available. But it's also about, you know, confidence to go out there and put the capacity in there and create the demand, Becca. And, you know, the US market seems to be ahead of everyone else in making that happen at the moment.
So where we've spent a year saying, oh, you know, this capacity we're seeing in the schedule ahead of time is going to come back down, it's too optimistic. You're sounding pretty bullish about this, what we're seeing here for the US in the second quarter, effectively.
Well, if you think, you know, if you think about the necessary ingredients, then they have a large market, they have a large disposable, a lot of people have disposable income, there is pent-up demand, the vaccination is out there, the states are easing their restrictions, be that right or be that wrong. And they can't travel internationally apart from Mexico and the Caribbean. So, you know, these people have got us fed up.
Oh, here it is. Here we come.
Yeah, I think there's a lot of factors here, and it just all points in the favor for the U.S. Domestic at the moment. And they, you know, they have all the employees, you know, were protected, so that is a factor. But most importantly, it's the demand, and you have the vaccination rates, and you can have the internationals. It's more complex. Even if you have two countries with high vaccination rates, the bilateral you know, issues and the challenges to open that market up is much more complex. So you really have to have a domestic market, and you have to have high vaccination rates, and you have to have an airline that's ready to put the capacity in. All three of those things. And unfortunately, a lot of the world doesn't have that. They don't. You know, they're missing one or two of the three. So we're not going to necessarily see what we're seeing in the US in that many markets, I'm afraid.
Yeah, let's have a look at some of those others. So this is the same sort of data. On the left, we've got European carriers. On the right, we've got some of the other large carriers from different parts of the world. So Indigo, LATAM, Emirates, Japan Airlines, Qatar, and All Nippon. Sorry if your airline isn't appearing here, but we've just taken a selection that are sort of indicative. So on the left with the European airlines, we are seeing they're actually quite strong expectations of capacity increases in Q2.
Yeah, and there is a hope that on the 12th of April, the UK government creates a policy that they may or may not change before the 17th of May that will allow international travel. But, you know, to the point we've just been making, if the UK does that, then it's got to be aligned with what other countries are allowing and will accept from other international markets. And airlines are banking on that recovery taking place. It's a huge gamble for them all, and it is bullish. And to Brendan's point, you know, they're putting that capacity out there. They're hoping that people are going to buy tickets because that generates revenue. And if they have to sort it out and refund it at a later stage, so be it. You know, that's an inconvenience, but they'll have cash flow benefit for a period of time.
Right. Okay. Let's have a look at, just quickly, this is the top 25 airlines that we had from 2 years ago, and we just took a look to see how their rankings had changed over those 2 years. So we now have no European carriers in the top 25 this is for capacity. We've had carriers like Indigo, Lion Air, Azul climb up the rankings. 8 of the top 25 based in the US now, 10 of the top 25 based in China. Very different picture to where we were 2 years ago, and obviously no surprise there. But to what extent might this sort of pattern stick? I guess that's my question. Will we see the British Airways, the Lufthansas coming back in future, or has there been are we now so far down the road this is a permanent sort of shift?
Becca, this has got about as much chance of sticking as snow has of staying in the Gobi Desert.
Great, I love your opinions. Excellent.
Yeah, this, this is just so short term. If I was one of the carriers who suddenly appear here like a Spirit or a Frontier, who to be fair have been growing their capacity, and suddenly you're being ranked as 19th largest or 25th and you were 62, then grab a screenshot and use it in your investor presentations as much as you possibly can for the next year until the recovery occurs. This is some of the characteristics of this replicate everything we have been saying. These are airlines with a large amount of domestic capacity, and that's why they are appearing there. And that's been very, very apparent through the whole of this process. And I guess there's a couple of outliers. Qatar Airways, who continue to operate through the whole of the pandemic, and let's not belittle that effort because it's been very important, but it's also been supported by a significant shift to cargo operations and cargo capacity, which has undoubtedly helped them. But this is, we'll look back at this in 2 years' time and say, are we sure this is right? Because we'll see the Ryanairs, we'll see the EasyJets, the Wizzes, certainly, British Airways, Lufthansas, and others reappearing in these lists, and we should all hope for that to happen, because it means the world has returned to something like its normal situation.
I think that's really helpful. I think for data geeks like myself, it's just always challenging, not wanting to always be looking back to the past, and yet that we need to, because we want to be seeing where the Ryanairs and the EasyJets and so on are, and not just focusing on these carriers that today appear to be the big players.
Yeah, and there'll be some small changes, I think. Wizz will come back up much higher than they were because they've been using this as an opportunity to just down temporarily. Some of the big names will still be up there, but at a lower place than they were before, because they'll have contracted and restructured more than others. But overall, it will look a lot more like what it did pre-COVID than it does now. This is just all about US and China, and that's basically what this is showing.
And I think the other thing, Becca, is this will, when we look at this in a year's time, it will reflect the structural shift away from legacy models connecting traffic to more point-to-point type carriers, and that will evolve again over time. So if we looked at this in perhaps 4 years' time, we'd see more of that legacy carrier connectivity type sort of thing. But we know the recovery is going to be about regional. We know it's going to be about point-to-point before it gets to long haul and long haul connecting. So this will evolve, and it will be a good time series to track.
Okay, good. Well, let's have a look at two specific airlines in Asia Pacific that didn't make the cut on the top 25 that we just saw there. Well-known brands, high-profile brands, Cathay Pacific, Singapore Airlines. They've been really hurt by this, obviously, because they don't have a domestic market. What can we say about them? What are their prospects going forward? Brendan, do you want to say a bit perhaps about this?
Qatar was like we were saying, was an outlier in the last one. So Qatar doesn't have a domestic market, but they've been much more aggressive, and Middle East has opened up more than Asia. So they still have been able to make the list, while Singapore Airlines and Cathay are not close to making that list, because their markets have been so impacted. And it's interesting to compare Singapore and Cathay right now, because Singapore and Cathay were following similar buildup of capacity strategies until late February, when Cathay had to reduce their capacity significantly again due to the restrictions in Hong Kong, particularly the crew-related restrictions, where it's the only country, I think, that now requires crew to quarantine upon return. And it's a really excessive measure by Hong Kong, and it's really impacted Cathay. And they also have 21-day quarantine there as well for visitors or anybody coming back to the country, rather than 14 days, which has impacted demand even more. So Singapore Airlines has been ramping up capacity. On an ASK basis, the group is at 25% normal now. And they've been gradually ramping up over the last several months to reach that 25% point. I think they'll plateau at that for a while, until the recovery really starts, because they're way ahead of the actual demand. They're doing it for strategic reasons, similar to Qatar. Actually, they have the funding, and they have a desire to strategically kind of operate and connect a lot more places than demand shows. And as a result, for example, Singapore's load factor these days is in the single digits. Their February load factor was reported 2 days ago at 9.5%. So
single digits, goodness.
yeah, and Cathay was going to do the same thing. They were going to go up to 25% in the next couple of months on an ASK basis, but all of a sudden they had to put a halt to that plan. And now they're really at what they were in May of last year, during the lowest period. They're back at just like 4 or 5% normal capacity on an ASK basis, and they'll be there until really their current level of restrictions is lifted, and hopefully that will be won't be too long. But Hong Kong's become very conservative. So these two airlines, are airlines keep an eye on. To see what happens. But I think, after 6 months, they'll probably be back at the same, roughly the same again, because eventually we'll get through this phase, and they're both have very strong liquidity. Both, even though they've both been hammered by not having a domestic market, they have very, very strong liquidity. So they will be able to recover and bring back that capacity. When that demand is there. So. Singapore will again stay at 25% until that happens, which is already kind of high. Cathay, unfortunately, will stay at like 6% until some of the restrictions are lifted, and then we'll see more normal behavior from them. But over the long term, I think that their prognosis is still pretty good. They just have to wait it out a lot longer because there's no domestic market for them.
It is incredible when you look at those numbers, and a year ago, which is obviously one of the things that we're sort of thinking about now. If we'd seen this chart then, you would just have, it would have been incredible to look at, and you would wonder how they survive. But it is all about liquidity, isn't it, and cutting costs. And what other things have either of these airlines done to help them survive through this period of time?
Well, the big thing is government support. So they've gotten packages from the governments, multiple layers of support, from supporting their workers with wage subsidies to Cathay is now partially owned by the Hong Kong government. They came in with new capital. Singapore came in with new capital, using Temasek, which is the Singapore government investment firm. And Singapore Airlines also has raised money privately, but they've also, obviously cut costs as much as they can. They've been working aggressively, with the suppliers and Cathay, particularly with the unions as well, which was always an issue at Cathay. With relatively high labor costs. A lot of that has now been resolved, which should position them better for the future. But they still have very large burn rates. Singapore Airlines burn rate is now a couple $100, 200 million a month or so. Cathay, is similar, but the problem with Cathay now is going back up because of the issues that they have. And while Singapore's is, even though they've added capacity, the burn rate has gone down a little bit, despite having 9% load factors, because there's all sorts of other things that go into that. So they've reduced their burn rate and reduced their costs as much as they can. But of course, it's still an ugly picture, but they have the liquidity to actually maintain even a couple $100 million per month burn rates for a couple of years. So that you're not as concerned about them as a lot of the other airlines, which don't have liquidity to survive 2 years, obviously.
And they've deferred some of their aircraft deliveries, haven't they?
Yeah, the Singapore Airlines, every airline has deferred, both have announced some deferrals, not necessarily as aggressive as some of the other airlines, I would say. The other airlines, some of them have even been able to stop deliveries, near-term deliveries, which is very challenging to do. But Singapore Airlines has continued to take delivery of airplanes, in recent months. So so they don't turn their back on the manufacturers or leasing companies. Which some airlines actually have done because I guess they've had no choice. But they have worked on deferrals, and both, of course, have the 777X on order. Boeing has issues with the 777X anyway, so they're benefiting from a much slower and much delayed initial intake of 777X.
Right. Okay. So as if all of that wasn't enough of a problem, we have a rising jet fuel price, don't we, John? Do you want to say a bit about this? Because we've seen in the last 4 months, I think the fuel price has gone up about 75%. So not as high as it has been, but fuel is what, number one, number two cost usually for an airline when it's flying?
It is, and it's the largest uncontrollable cost element unless you want to hedge. And we didn't discuss the context of Singapore Airlines and Cathay Pacific with their recent fuel hedging strategies, which have, I think, been disastrous for both of them in the last 4 or 5 years. Yeah, this is almost like so you think you're out of trouble, guys. COVID-19's behind you. Right, here's the next thing. Price of fuel is beginning to escalate and escalate dramatically. And as we go into the recovery, this is going to be a real dilemma for airlines, because it's one of the things. Do you try and pass on that cost when you're flying around with only 9% load factors, or do you try and bear it and wear it? Do you think about hedging again? And if so, what are you going to hedge, and do you have the cash to allow you to hedge? This is the next big issue that the airlines are going to have to face, and it just points to all of the wrong messaging for operators through the summer season. Typically, fuel prices fall in the summer. There's less global demand, and therefore the price sort of settles and takes a bit of a rest. But to see it moving up like it is at the moment is a bit of a worry. And we've got OPEC, of course, that are now controlling production, and there's always vulnerability in the supply chain. So it's more than a concern, Becca. I think this is just another problem airlines have got, and whilst they're only looking 6 weeks out in terms of capacity and demand, this one's probably sitting under the carpet, and someone looks at it occasionally and says, "Oh, here's another nasty one we're going to have to work with."
But some of the recent increases caused by things like the storms that occurred in the US, which affected some production. So those aren't long-term issues. Obviously OPEC is.
Well, you can equally argue a united OPEC is not a long-term issue, because that tends to whatever they agree breaks pretty quickly. So there may be some optimism in those sentiments and previous experiences, but for it to have increased by nearly 75% in a 12-month period, and yes, there was very little demand for global oil throughout the last 12 months. This is a reflection of as much the pickup in the global economy, or the hoped for pickup in global economy, as it is pure aviation demand.
Yeah, fuel prices is definitely a concern. It's very hard to predict, of course, but if they do continue to rise, it will definitely have an impact on capacity. A lot of airlines, are bringing back capacity now that's not profitable. It's really, again, I mentioned this before, it's covering variable cost, which they really want to get the utilization of crews and aircraft up, but they're not actually able to make much contribution, if any, to fixed cost. But they're willing to just put on extra flying, especially in domestic or maybe later on short-haul international markets, if they can cover variable. But if fuel goes up, that changes, and they'll be less likely to add back capacity, because covering variable become a lot more difficult. And things like operating flights with very low load factors, things like operating passenger aircraft freighters also becomes much more challenging, because passenger aircraft freighters are very inefficient, generally speaking. And if you add high fuel prices to that, they become even more inefficient. And even with relatively high cargo yields, in many cases, it becomes an uneconomical proposition. So this will be a concern if this trend continues, but I'm not going to predict it will.
We do need to keep it in a bit of context, because the price we're at now is broadly similar to, as you can see from this chart, to the sort of price we were holding from mid 2017 for about a 2.5 year period, which coincided with the most profitable period for the aviation industry generally. But that was when we were in a position of normal demand and normal capacity and normal yields, all of which, we know have been thrown out the window, and we're starting from zero yields in many cases.
Yeah, and I think a lot of airlines are assuming low fuel prices for the duration of this crisis. So it just shows you can't assume anything.
Yeah. Okay, thanks both of you. We said that we would talk about why we've seen so few airline failures. We've listed some items here, some reasons on the slide why we think there have been fewer airline failures than perhaps we might have expected. We have seen some, obviously, the likes of Knox Scoot and Level Europe, CityJet, Liat, but we've already talked about the government support, which has been a big factor, hasn't it? Low cost of borrowing, beginning to see perhaps some mergers and acquisition activity happening. Well, do you want to talk us around this, John? Why do you think we've seen, a year ago, we really would have thought we'd have seen a whole bunch of airlines going under, and the questions we had all the time on the webinars were, which airlines aren't going to survive, and that's just not been the case.
No, and we have seen some churn of airlines in the last 12 months, but not above the sort of average churn that we see every year. High profile is Knox Scoot or Level Europe really high profile? Probably not. But the absolute fact,
I think that says it all, doesn't it? That these are the highest profile ones that we're seeing. It's perhaps surprising.
From an investment perspective, if you are a financier and you are in the market, and particularly the aircraft trading market, who's going to take those aircraft if you take them back off an airline? Answer: no one at the moment, unless you're Norwegian and Norse Air may come in and use your Boeing 787s to start a new airline. But it reflects the fact that this is a very strange time. The risk of keeping that aircraft with an existing operator is probably lower than taking it back off them, because there is a hope that they will re-enter the market. They will have been supported by governments and other loan guarantee type devices, and they can re-enter, and you will get your money back. Better in a long-term perspective to take a 2-year or an 18-month hit on your payments than to end up with an asset that you can't place anywhere else, or if you do place it, it will be at a lower margin and yield than you previously had with the incumbent. So I think we've all had to take a very pragmatic perspective of what's happening and look at it from the long run, and just take it as a punch on the chin and move on. The mergers and acquisitions, I think, is fascinating. I mean, this is an absolute time for them. The interesting thing, and I think your slide speaks to it, to the whole problem here, Becca, is that all three of those that you mentioned are essentially domestic pieces of consolidation rather than international acquisitions and roll-ups.
Yeah.
And until we sort out the regulatory environment around international ownership of airlines, then we're not going to see much beyond a couple of mergers within domestic markets. So it's a surprising situation, but when you delve deeper behind all of the points, it just makes sense for anyone who has invested in all of this to just sit it out. And yes, Rodolfo, we have left out Czech Airlines, but quite frankly, they wouldn't be much bigger than Level Europe or CityJet in some of these things. It's another sad demise. But that's maybe what we do need to see. We need to see less airlines in some of these regional markets, because it had become fragmented. I was doing a piece of work yesterday for a client, and I can't believe there are 138 airlines in Canada with an IATA code, And if you take away the top 10, so the remaining 128 airlines have an average of 4.5 aircraft each. You know, the industry is just too fragmented.
Yeah.
So I think what it does point to is that, going back a little bit, is that the pain is being shared across the industry, isn't it? I think there was a question that stuck in my mind that from quite a while ago about, you know, is the pain being shared? And I guess behind the scenes there is a lot of negotiating of costs and suppliers to the airlines actually taking, as you said, there's the lessors, the airline companies taking a bit of a hit as well here, because what can they do? They can't, you know, they can't take back aircraft in large numbers, can they?
Well, maybe they can now, because as the 737 MAX leaves the car park, there'll be a bit more space for others.
Yeah. Okay, let's have we've just got a little bit of a summary here. Some of the different strategies that we're seeing from airlines to keep going. Obviously, we've talked a bit about liquidity, and I think, John, you suggest I put in the example of British Airways here. I don't know if you want to say a bit more about that, but there's lots of other strategies, aren't there? We've seen KLM recently announce that it's going to start a tour operator, so that's, you know, moving a bit more towards the leisure market. We're seeing airlines like Malaysian Airlines coming out of restructuring, you know, as a slightly different entity, I guess. We're seeing the government support, which we've talked about, a lot of direct support, a lot of furloughing of employees, which has really helped many of the airlines. Cost reductions, many different forms. I've listed a few from Cathay Pacific here. We're seeing some startups. I think, Brendan, you were telling me that Lion Air is creating a new startup airline. So we're seeing a whole range of strategies out there, aren't we?
We are. Amazing creativity. I mean, how an airline group can, after 12 months, have more liquidity than they did before they started this game is, you know, it's a bit like stealing someone else's monopoly money when they're not looking, really, isn't it?
This is British Airways you're talking about now.
Yeah, it's British Airways. Well, IAG, but it, you know, testament to them, and poor old me as a shareholder having to suck up some more cash for them. But it is creative. Everyone has found solutions and has done different things, and it's a testament to how flexible I think some of these airlines have been, and how creative, as I say, they are. It will lead to a very interesting recovery scenario for some of these and how they play out. But I think one of the comments on your previous slide is probably more relevant than all of these, Becca, is, you know, how on earth are they all going to pay back the debt that they have built up in the last 14 months? That is, you know, technically this is again a bankrupt industry, or by any definition would be bankrupt if it was looked at in the full context. So so fascinating. I mean, Lion Air, Brendan, you were saying this new startup airline is an interesting development on their side.
Yeah, well, so I mean, it's basically a plan B in case you know, things don't succeed with the renegotiations with leasing companies on their existing airlines. So they've created this new airline. They're well down the process of getting an AOC. They've already done a few deals, lease deals on aircraft, getting aircraft at very good rates, and I think, you know, they will go ahead with the airline, but, you know, how big it becomes or whether it actually replaces the existing Lion Air, you know, completely will depend on what happens with the negotiations. You know, in Southeast Asia, there's a lot to still be done. Malaysia Airlines is really the only one that's completed a financial restructuring. They with the help of the UK court, they've you know, renegotiated and completed lease deals for their entire fleet, 737, A330, and A350. The A380 is going to, I think, will be cut, but that'll be handled locally because it's financed locally. But most of these other airlines haven't made much progress yet in terms of renegotiations. A lot of them are looking at bankruptcy or planning bankruptcy, or maybe, you know, in the Lion's case, starting a new airline to replace an existing airline potentially, you know, in order to basically, you know, avoid some of the debt overhang that you would have if if you don't go through courts and go through bankruptcies or start and close, stop and shut down something and start something new. So there's a lot of different strategies out there, and it was just early days, at least for this region, in terms of having any kind of outcome. So it's going to be another year or two of this, and we will see more airline bankruptcies. We will maybe see some airline failures, although I don't think we'll see that many because, like we were talking about with the last slide, the leasing companies, they have to support them. There's not very easy to remarket an aircraft in this environment, and a lot of these airlines that are very financially weak at the moment are very large. They're just too big to fail. So so somehow, some way, something will be done, whether it's with existing structures or with new structures, through bankruptcy or not through bankruptcy. I don't think we'll see that many failures, but we might see continue to see some smaller failures, especially in markets that already have many airlines.
We shouldn't underestimate as well that there's airlines that have taken the sort of opportunistic perspective and expanded their networks, or have made great strides in launching new businesses. So in Australia we have Rex, who've suddenly come from almost nowhere, a very regional airline, and are now head to head with Qantas. Good luck with that one. And then you've got Greater Bay in Hong Kong, who are very well financed. And then you've got some guy in Oslo who wants to start another long-haul low-cost airline using the aircraft he used to go out of business last time. So there's lots of carriers out there who are in the wings, just waiting to strike and enter the market when the opportunity presents itself.
One of the items we've not talked about on this list is this competitive tender for routes, which I was absolutely fascinated by. As somebody who's worked in air service development for many years, it's not something I've seen in quite this form before. It's not quite the scale of activity of the sort of liquidity and restructuring, but quite interesting. We've had a question from Sophia Borovivo about how do airlines predict demand for entering new markets these days? Do they use history data or vaccination dynamics or something else? Well, this is a completely different approach, isn't it, John? And we've seen a couple of instances now of this, and we haven't named an example, but do you want to explain how what we're seeing?
Well, there is a huge shift from airlines away from traditional revenue management parameters and looking at forward booking data and profiles to using big chunks of search data. So a lot of airlines, for instance, are using Google search data to assess traveler sentiment about destinations and demands and where they're seeing the most noise and voice, and seeing how they can match that to potential network and expansion. And I think we're
also seeing airlines literally just say, here's a tender, who wants to fly this route, or we're going to start a number of routes, and we'll look at the best offers. It's quite a different.
We've seen that as well, and that's as much a function of an airline perhaps having lost its strategic focus and looking for new opportunities and avenues. You don't place an order for 15 aircraft or whatever it happens to be, and then say, well, what we'll do is we'll hold an auction in 2 years' time to see who wants that capacity. And the market will have changed, and they're responding to that. And that is another characteristic. Data science is going to be at one end of the spectrum. Data science is going to be very important for airlines in understanding future demand. But then we're going to go to the other end, where we're going to have a trader market where airlines are going to be saying, and indeed airports are going to be saying, we think there is enough demand for this route. Who wants to step forward and make us an offer for it to operate and be successful? And that in one way, that will be interesting. It will take less, or it will remove some of the pressure off the airlines, because they'll be looking for greater investment from stakeholders and from local governments if they're going to launch services. And we get back to completely, the real crux of what air service does, which is create economic wealth and economic activity, and therefore airlines, quite rightly, are looking for others to take some of that risk with them.
Okay, we have what I'm aware it's 9 o'clock now here in the UK. We've got one more slide. We wanted to take a look at vaccination rollout, and we've got a dynamic slide here, so I'm hoping this is going to work. And what we've done is looked at, this is a bit of playing with numbers and it's quite speculative, but if we took the rollout of vaccinations at the first part of the year and we extrapolated that pace forward, which isn't technically perhaps the best way to do it, but it's the numbers we've got, where do we get to in the summer? So by the end of January, we're about there in terms of coverage of the population. End of March, we're here, we're at 50% of the UK, somewhere behind in some of the other markets. By the end of May and the end of August. So the point of showing this really was to say, obviously in the US, we've talked about a large domestic market, that it doesn't perhaps rely on vaccination in order to get the market going. But for countries like the UK, Spain, Portugal, Greece, where we travel internationally, it does feel important. But we're not going to see the numbers by the summer that are needed to be able to guarantee that both ends of the travel corridor are vaccinated. Where does this leave us? Are we going to see bubbles? Are we going to see agreements? Or is it all up in the air, John? Especially I'm thinking of the European market.
It leaves you and me booking a cottage in Cornwall, Becca.
Well, not together.
Certainly not together, I hasten to add, before anyone suggests otherwise. But the point is, this goes back to the whole concept of aviation, doesn't it? And it is bilateral reciprocity of air services that created the aviation market in the first place. And it's all very well the United Kingdom being at near 100% coverage and vaccination, or first vaccinations, which is brilliant. But unless we want to go to the United States, and importantly, the United States wants us to go there, or perhaps we want to go to the Netherlands and climb the 7 hills of the Netherlands, then we're stranded unless we accept that there is risk attached to travel. And quite frankly, that risk is probably no different to what it has been for decades. But it just highlights the challenges we have. And if some countries say they're not prepared to allow travel until they have 80 or 90% vaccination coverage, we are sadly still a long way from getting back to where we all want to be.
Well, that's really great. Thank you very much. We have tried to take as many of the questions that you've been sending in as we can as we've gone through this webinar. We hope that's been informative. I'd like to thank Brendan and John once again for all your insight, and thank you for joining us and taking your time today to give us your opinions and expertise. Thank you both.
Pleasure.
Thank you.
Okay, we'll be back next month. I believe it's the 14th of April for the next webinar. So you'll be receiving emails and notices about that. So please do sign up, and thanks for joining us today. Thank you.
Thanks.